All right, what's going on, guys? Welcome back to another trade recap. Today, we actually got some pretty solid price action, so I can actually make a pretty solid recap for you guys. There's going to be a decent amount of sauce within this recap that I think you guys are going to be able to utilize in your future trading. It's going to be in regards to these recent conditions that we have had, which have been, not really trending conditions. So if you've been trading continuations, you'll notice that price has not really been favorable for that type of trading model. Price has been more so, favoring reversals and, using specific retraces, rejection blocks, etc. So we'll kind of break that down here. So starting off here on the 15-minute time frame, we are in replay mode. So this is pre-market. So first off, what I want to do is I want to go up to the 4-hour time frame and I want to point out this area here. So yesterday, I noticed on the 4-hour, we made this 10 p.m. wick right here. And you can see this wick is what came into this 4-hour fair value gap. So this is a valid rejection block to use in price. It's a very prominent wick, and you can see we get a hard rejection out of that, confluence. And then coming into the PM session yesterday at 2 p.m., we can see that this candle comes up into CE of that wick, and then we start to see rejection from there as well. Now, if we take OT ranges of this area, we'll see that price ultimately held this 0.79 area. We did wick above it, but we ended up closing this candle below. So at this point here, I'm assuming that, price used this move up here as a retrace to come, lower once again, which we could see we ultimately did. So that was kind of my first bias towards us going short, because you could see overnight started to play off of, this wick fill here and started to see displacement lower into this, this area here. Going on to the hourly for today, this is still pre-market here. We had this hourly fair value gap here, right? And it did look like we could have possibly went up and taken out these low resistance draws. These are, trend line draws on liquidity. We have your opening prices up here as well. And we had swept previous day low. So honestly, coming into market, I was assuming we were going to actually buy up, but I needed to see, more structure in this 1-hour gap to confirm that we aren't going to hold it bearish and we're actually going to push through to push for these draws higher. Realistically, I probably would have been looking for us to trade somewhere above, previous day equilibrium and, more so trading above the actual hourly gap. And then at that point, you could start framing ideas too long into some of these draws towards previous day high. Now, this here, pre-market seeing this 8 a.m. candle, it did look like we were starting to V-shape and coming up to inverse this gap here. You can see we swept this previous day low, and then we still have the overall SMT here at previous week low with ES. So for some reason, the indicator is only marking out this internal low here, but ultimately we have, this external low SMT with ES now. So coming down to the 15-minute, what I saw pre-market, inside of this, big hourly gap, I saw that we also had this 15-minute gap. So I went ahead and marked that out. And then I also went ahead and took OTE of this range. Now, coming into this 15-minute gap, you'll notice that, OTE aligns perfectly inside of that gap there. So now we're going to scale down to the 5-minute time frame and play out some candles going into the market open. So we play out price and into, coming into market open again, we did look like we were going to potentially be bullish, right? We have this sweep down here, this SMT, we're V-shaping, holding continuation, looking like we're possibly going to draw into London. But for me, in order to, to long, I would have to see us ultimately trade above this 15, above this hourly, and then I can start to frame some ideas into London, midnight, true day open, Asia, etc. So let's play out more of these 5-minute candles here pre-market. So we'll see here, we start to come lower. And I did have this 5-minute gap marked out. And honestly, maybe would have entertained the idea of shorting if we would have got the inverse there. But I would have needed to see, obviously, the close. And we didn't get the close there. But I still noticed, obviously, we had this 15-minute gap. But at this point here, we were off the 618 level, off a weekly open as well. So this is an area where we very well could have flipped. If we got this close and it was a solid, close with volume, I would have taken this. But you can see the close failed. And this is 9:15 here, so we're pretty close into the open. So you're kind of better off just waiting to see what price wants to do at 9:30. So 9:20, you can see we're starting to come up here. Boom, we come up again, right? Okay, boom. So now we tapped into this 15-minute fair value gap. We tapped our previous day equilibrium level. And we also, I believe, well, we edged 705. But we make this SMT here at this internal high, SMT inside this 15-minute gap. So now for me, what I'm anticipating is, okay, it's obvious now price can very well hold. We see a sharp reaction off of this 15-minute, fair value gap and these other levels that are aligned with it. Then on top of that, we have some pretty decent, trend line lows here. You can see all this low resistance liquidity coming down into, this low of day from 6 a.m. So coming into open here, I was, more so leaning bearish unless we got an absolute, obvious signal that we wanted to go higher in terms of, seeing ES break this SMT, seeing us, trade above this 15-minute 1 hour gaps, etc. So now playing out price again, we'll go down to the 1 minute now. So here is your 1 minute time frame. Now this was a pretty solid, trade to take into the open. I personally faded this, but it did end up playing out ultimately. You could have very well just taken this down into these trend line, lows, and this trade ended up playing out. But I didn't actually take this myself just because it was right before open. I wanted to see if we wanted to possibly manipulate higher one more time, sweeping out these highs, digging into this 15 more before coming lower. So let's go ahead and play out this next candle. So we open up, absolutely just start displacing. Boom, right? We take out, all this trend line liquidity here. We take out, these final range lows here. And then now we're kind of inside of a bullish area. So coming on the 15, what I saw at this point was now we tapped into this, last 15-minute of the leg, last gap on the leg, right? So now we have a 15-minute gap in play. There's an SMT in that area now with ES. So now I'm wanting to see, okay, do we want to hold this, potentially, look to reverse up, or, are we going to continue to flush past this? Now, at this point in price, when we are in between confluences like this, you can possibly expect us to chop. So for me to take an entry, it has to be super clear and super obvious. So now this is our 9:30 open. We're at 9:31. Let's go ahead and play some more candles forward. So at this point here, kind of looks like we're still a little bit weak in price. Okay, then we get 9:35 here. So on the 5-minute time frame at 9:35, off this candle close, we create this huge 5-minute fair value gap, right? And then on top of this, we do have, this 5-minute CISD, right? As well as this, breaker, which I don't typically use breakers, but for the sake of this video, I'll mark it out because this is essentially a unicorn model, which is, something that doesn't really present itself too often. But these play out very well a lot of the time. So we have this 5-minute fair value gap right here. We have a CISD. We have a breaker block. Now, at this point here in price, what I look for is where is OTE of the leg? Where is equilibrium of this leg, right? So at this point, I'm going here and I'm taking the top to bottom of this leg and I'm looking at these levels now. So we can see here equilibrium is inside of this, 930 gap. We have 618 at this, pretty much a CISD tap, and then 705, is still inside of the breaker and overall the bearish range. So around this area is somewhere good to limit. Personally, for me, I don't like to take limit orders. I like to see displacement off of these key levels in order to take entry, just because I feel that they're high probability in that case. So let's go ahead and play out some more price. So at this point now I'm waiting. I don't really like these, candles that are printing after seeing all this volume. These are pretty weak candles, and now we're inside of this 15-minute gap. So we're coming up here and coming up. Now, here's some more sauce, which again, these are a lot of things that I don't cover in a lot of videos, which is why I mentioned that I'm going to be dropping some sauce in this video. So we're taking this standard deviation, right? We can see we make this, internal sweep here down into this 15-minute, CE. If you want to get more technical with this, right, we do end up tapping OTE of this bullish range perfectly, right? 705 is here. We wick that perfectly with CE of this gap. And then we can take this standard deviation leg to see where we could potentially react from if we want to be bearish. So basically now I'm wanting to see, okay, are we going to hold this 15? Are we going to come up, start flipping this, bearish price action? Or are we going to come up and start respecting these levels? Now, coming up here, you can see how these levels are super overlapped. We obviously have, this -1, which is, a retrace area where we can start to come lower from, which aligns with the CISD on the 5-minute. and also aligns with our, equilibrium level. And then we have more levels coming up that come up to our golden pocket level, etc. So playing price out more, boom, you can see we come into that 5 minute gap. Now at this point, I'm waiting for confirmation. We can see now we wick off of that CISD, tap that -1 level, right? So at this point, if price is truly wanting to be bearish, I'm going to want to see us make a strong displacement or some strong volume off of that. So play out this next candle, boom. That's all you need right there, right? So for me, what I took today, I took this entry right here and I had my stops at the body high, right? This is a strong displacement candle. We make this, internal CISD now. So we create this kind of 1 minute CISD off of the 5 minute, right? So this stop is essentially protected by that CISD. Okay. We make this small 1 minute breaker if you want to consider that. Again, I don't really use breakers much in my own analysis, but in terms of unicorn models, they're good to mark out just for, some more conviction. Now, I did only target a simple 1R and I went for this 1 hour wick CE. Now, the reason that I went for this 1 hour wick CE, you can see here, is look where this is marked and look where the 0.79 fib lines up, right? So this could very well have been a resweep of these lows to tap into this rejection block because this is the 1 hour wick that swept previous day low out. Could have tapped into 0.79 into this 1 hour rejection block and then sent us higher, right? So I'm taking what's obvious in price. Now, had this not been a wick that I could consider a rejection block, right? Had, these levels not lined up perfectly and, that wick wasn't as prominent, I would have been looking to take this down to, this 6 a.m. lows and these internal lows that I have marked out here on the higher time frame. But for the sake of, wanting to just catch a simple 1R and wanting to just catch something simple on a Friday, I took this clear trade. So let's go ahead and enter position here. Stops were here and then TP simply here. Now, break even on this trade, I mean, it's just going to be these internal lows pretty close to the TP. So we're just looking for us to continue displacement lower and breaking even once we get into these internal lows here. So again, going over why we enter this trade, we have this 5 minute CISD, 5 minute fair value gap, right? We're tapping into, equilibrium of this range, right? From top to bottom of this range, we're tapping into equilibrium, right? We have this small manipulation leg from the bottom, which we come into this retracement area of -1, right? And we're obviously reacting from a 15 minute and a 1 hour fair value gap on top of that with an SMT on the higher time frame. So we have everything we need in terms of, bearishness to take a short setup. So let's go ahead and play this out. Okay. So we end up getting what I would consider to be our first presented gap right here, right? So I'm going to go ahead and clear up some things in price so that it can look clear. All right, so we make our first presented. Now, the reason I wouldn't consider this gap down here to be first presented gap is because it's, not really a significant imbalance in price. This imbalance is pretty significant. This candle has a lot of volume. And then we don't use our 930 gap as first presented. It's 931 and beyond. So this is our first presented here. So this stop here, once I see this gap form, I'm pretty confident in this stop. If this gap is actually going to send price lower, we have no reason to come above this body high or really come above the gap at all. So let's play price out. Boom, you can see you get another displacement candle. This could have been an area to scale in, right? Add more contracts. Personally, I don't scale in or take partials on my trades. I usually size in, full size and TP full size. But this was another good re-entry to take on this setup. So let's go ahead and play this out now all the way. Boom. And, we didn't even get the chance to move break even. This candle pretty much just printed all the way to our TP. And then, yeah, it's pretty simple, right? So again, right, we come into, a premium area in price, right? Coming into equilibrium, coming into a premium area. We are reacting off of a standard deviation level, off of this, internal manipulation inside this 15-minute aligning with this bullish fib. And then coming into a 5-minute gap, CIST, etc. Seeing strong reactions off of that for an entry trigger, making a protected stop above this CISD and then above this first presented that got created after entry, and then taking a simple TP at that 1 hour wick CE. And then ultimately, this ended up running all the way down. We'll go ahead and play it out. Right, this ended up running much further into these sell side draws here. And then previous week low would be an extended target, which I don't think we've taken yet. But just wanted to take something clean, simple for this session on Friday And, I've been struggling pretty bad in these conditions, if I'm being real, just for transparency purposes. Obviously, you can see market has not been, the greatest when we go on a daily time frame, right? We are in pretty heavy, accumulation. And hopefully now, this break, once we can start to break lower, we can start to see some more expansion and movement in the market to make things a bit easier. Um, but that was pretty much the trade I took and the breakdown for today. Here are the P&Ls. Again, these are evals. I have 150K evals. They're about two-thirds of the way past. I only need around 2 point something K per account in order to pass these. So next week I'll be looking to pass them, just compounding, not really sizing too heavy or too aggressively. Just in relation to the conditions we've been having. I did take a little scalp on gold last night. Wasn't anything crazy, nothing to cover really. It was a simple, really quick scalp off of momentum overnight with some volume. So nothing really crazy to cover there. But yeah, that kind of covers the Nasdaq recap. Um, you can see, yeah, we didn't come down for this previous week low. We ultimately made the strong move down and then started to accumulate, which makes sense. But yeah, I mean, that's pretty much how I caught this short on Nasdaq. So again, if you guys do enjoy these videos, be sure to leave a comment down below. I try to drop more value in this video than usual. Just give you guys kind of more of an insight on how I view the markets. But essentially, it's all just top-down analysis, multi-time frame alignment, right? We're taking levels from a higher time frame and then scaling that down into lower time frames and then scaling that down into even lower time frames to take precise entries, and it gets that simple. So hopefully this video made some sense to you guys. Hopefully you guys can gain some value out of this. If you guys enjoyed this, be sure to drop a like, comment, and subscribe, and I will be sure to drop more videos like this for you guys going forward. Take it easy, guys. Later.